The directors are pleased to recommend a dividend of 22 Kobo per ordinary share for the 2020 financial year. I now put the resolution to the meeting by calling on you to vote on your electronic devices.
For the purpose of voting on that resolution, please press 1. The poll is about to be displayed. At the end of the voting on that resolution, which is to declare a dividend, we have 485 shareholders voting by proxy and physically present, representing 11,906,121,746 units, while we have one shareholder voting against the resolution with 4,000 units, 100%.
I hereby declare the resolution carried.
I want to speak to a couple of questions that were raised in the question and answer session. I want to start with the first one about the CSR in the Southwest. I was the ED Lagos and Southwest, and I can attest to the fact that we engaged during that time, especially during the COVID period. I personally supervised the effort to send the COVID palliatives to all the states in the Southwest. And I know that a lot went there. Each of the states received several items. They received everything they needed for the intervention, gloves, all the COVID protocols that were expected to be observed. We intervened on all of them. So some states received cash, some states received the items. That does not mean that it's enough. Southwest and Lagos made me what I am today, so I'll continue to look out for them. You also spoke to the fact that you hope that we're going to do to ensure that the dividends for the years coming will do very well. You can see what we've done in the first quarter, and we intend to sustain that, which means that coming back by this time next year, we are definite that we'll make sure that we put smiles on the face of our shareholders. So because one of the criteria that we're using is that we are actually on, we have the target to get to tier 1 by 2025, and we changed because of the COVID disruption, we changed our initial target of getting to 2025, getting to tier 1 by 2023 to 2025. And we also changed the criteria to achieve, we intend to achieve 7.5% of market share in our total deposits, in our total assets, and the risk asset by 2025. We also want to ensure that we reduce our CIR, which has been a problem for the bank, to 60% by 2023, and also to get to an ROE of 20% by 2025. So when we do all that, we know very well that we will compete very favorably, and we will ensure that our dividends to our shareholders increase significantly.
On the financial results for last year, let me say it was better than it looks. There was a lot of vigorous discussions about loan provision for loan loss. Those provisions you see are not actual losses. It's just we felt that it was a very challenging environment, and it was prudent to provision as much as was allowed by rule. If it turns out that we over-provisioned, you will see the benefits this coming year, either by us provisioning less or by us recovering some of the provision. So it's not money that's lost. It's money that we thought was prudent to put aside so that we don't have a very bumpy year in the case the worst thing happens. So I just want to clarify that. So it was a much better year than it looked. The issue of AMCON levy and also regulatory levies are an industry problem. And again, it's not good for Fidelity Bank to, in things that affect the industry as a whole, not to consult other banks and have a position that's a general position. You don't want to be the outlier in things like this. But it's a concern, and I think it's a concern that should be dealt with on an industry basis.